I'm Steve King. I'm a partner with MK CPAs. We are continuing with our video series dealing with the coronavirus and its impact on businesses. Today, I want to talk a little bit about some things that are very recent in legislation. The biggest question I'm getting right now is we know there are loans available, but are they forgivable? And the answer to that is it looks like they're going to be forgivable. Congress is working on a $350 billion package for forgivable loans for small businesses. And what does that mean by small? 500 or fewer employees are eligible for these potentially forgivable loans. The loans, to be forgivable, they're going to need to be used to pay payroll, rent, and or utilities. And things could be added as we get more guidance. But if you use these loan proceeds for these items, the principal can be forgiven. The other aspect of this loan is there is up to 4% interest. If the loans are forgiven, the principal will be forgiven, but the interest will still be owed. The second big piece of legislation for small business is an employee retention credit. The first video discussed 80 hours of a payroll credit that's covered to help pay employees as they are personally dealing with the virus themselves. This is a separate credit. This employee credit is retention credit is for businesses that are partially or fully suspended due to the coronavirus itself. So they're different in nature, and this one works a little bit different. How this is going to be tested is if your gross receipts are down 50% versus the same quarter in the previous year, you're going to qualify to get a payroll tax credit for 50% of the wages paid during the crisis, right? And that I have an example of that right now. I have a client who's office manager. She's still continuing to work, trying to collect receivables. So she's going to be eligible for a potentially eligible for 50% credit for that. The third piece I want to talk about today is a little bit different. It's not a credit or it's not a loan, but it's a delay in your payroll tax contribution, which is going to help small businesses with cash flow. So this is designed, typically when you pay your employees, you're also going to do a Social Security matching of 6.2%, and now you're going to get to defer that contribution that you have to pay to the IRS for up to 2 years. So the first half will be paid by December 31st, 2021, and the second half will be paid by December 31st, 2022. Let me give a simple example of that. Say an employee earns $5,000 in a pay period. $310 will be withheld for Social Security from their paycheck, and there will be an employer contribution of $310 that's matching that goes to the IRS. The $310 withheld from the paycheck will still need to be submitted to the IRS, but the $310 company contribution can be deferred for the 2 years. So that's going to be a significant cash flow savings for small business that's going to be needed in times like this. Now, this is what we know at this time. This is a very fluid situation. Senate and House have voted. It's not been signed yet, so there's going to be some rules subject to interpretation. The whole goal of this video is to give you information to get started in preparing your business to weather the storm. So please, please, please reach out to your CPA for advice on any of these situations. If you need help, please feel free to call me. Again, I'm Steve King with MK CPAs here in Louisville. If I can help, call our office. It's area code 502-587-9833. We are still working. Remember, hang in there. We will get through this together.